Hello guys and welcome back to another short company insight. Today we are going to take a look at Microsoft. As always, here a quick overview of the company. The current headquarters is located in Redmond, Washington, USA, and the share price at the closing on the 2nd of November 2023 was $348.32, which corresponds to a market capitalization of around 2,570 billion US dollars. Microsoft operates in the technology industry, more specifically in the software sector. The current dividend yield is 0.87%, which is average by historical standards. So much for a brief overview. Let's continue with the company's history. On the 4th of April 1975, Microsoft was founded by Paul Allen and Bill Gates in Albuquerque. The two met at Lakeside School, a private school with access to one of the first mini-computers. They initially programmed software for a company called MITS and were paid on sales. Over the years, they expanded their consumer base, which included Apple with the Apple I and IBM. In 1980, Microsoft achieved a rapid rise through the cooperation with IBM. In 1986, Microsoft moved his headquarters to Redmond. Today, about 70% of the computers worldwide have Windows as their operating system, but this figure was once 95% in 2009 through the rise of Apple. But now let's take a look at the CEOs and who runs this company. As you can see, Microsoft hasn't had many CEOs in its past, which in my opinion is a sign of consistency. The longest CEO by far was the founder Bill Gates, followed by Steve Ballmer and the current Satya Nadella. Let's now take a closer look to Satya Nadella's career. Satya Nadella was born in 1967 in Hyderabad, India, and also grew up in India. He attended Hyderabad Public School and completed his Bachelor of Engineering at the Manipal Institute of Technology in Manipal, India. He then completed his Master of Science in Computer Science at the University of Wisconsin-Milwaukee in 1990 and his MBA at the University of Chicago. After graduating, he worked briefly for Sun Microsystems before joining Microsoft in 1992. So much for the CEOs and the person who runs Microsoft. Now the question remains as to what Microsoft does at all and what the figures look like. The business model. Microsoft is a technology company that develops and supports software, services, devices, and matching solutions. On the bottom of the slide you can see a pie chart which is divided by Microsoft's main sources of income. And on the left side you can see a list of them. Microsoft's by far biggest source of income is Intelligent Cloud, which includes server products and cloud services like Microsoft Azure, followed by productivity and business processes like Office, Commercial, LinkedIn and other. And Microsoft's last source of income is personal computing, which includes Windows, devices, gaming, and other. The pie chart here shows the segments by turnover for the financial year 2023, but let's now take a brief look at the development of turnover by individual segment. As you can see, the sales segments have remained fairly constant at around 1/3 over the last few years. Furthermore, you have probably also noticed that the turnover has risen significantly and has more than doubled over the last 9 years. But more on this in the overall income picture. As you can see from the bar chart of revenue and profit growth, over the last 21 years, Microsoft has grown tremendously over the last few decades, especially since 2017. And the estimates, which you can see below the bar chart, suggests that Microsoft has a positive outlook for the future despite its size. However, it is important to point out that these are just estimates and not necessarily accurate, meaning the actual numbers could be either higher or lower. But let's look what such figures have done to the share price. Wow, the share chart has had a breathtaking performance since the IPO in 1986, and $100 invested would have turned into approximately $333,830, which would correspond to a return of 333,830%. It is important to note that the share price has been reduced through various stock splits in order to offer more investors the opportunity to invest. Now the question probably arises as to who is invested in Microsoft at all and to what extent. Here you can see the shareholder structure of Microsoft, and you will probably notice that it looks very similar to the most shareholder structures, as investment funds or asset manager have a large stake in companies that are in the S&P 500 or other indices. Before we get into the competitors, a little story about Microsoft. Microsoft once had a major stake in Apple, but more about that in the video about Apple. What a surprise! One of Microsoft's main competitors is Apple. You probably realize that most companies have something to do with software. But what is Amazon doing on this list? They are just an online store, right? Correct, but Amazon is now strongly represented in the cloud business with its AWS, Amazon Web Services system. Now that you have gained an insight into Microsoft's competitors, you are probably wondering when we will finally get to the heart of the matter, the key figures. We are only going to take a quick look at Microsoft's 10 biggest acquisitions. As you can see, Microsoft has already spent a lot of money on acquisitions, including some very well-known brands such as Skype or LinkedIn. But Microsoft's biggest and most controversial acquisition is Activision Blizzard, which went through a few weeks ago for $68.7 billion after major concerns from the antitrust law, especially from the UK. Now we finally come to the key figures. The key figures have been divided into 4 different areas, and we will start with the financial stability area. So you can see that Microsoft's key figures look excellent, but now let's go into some more details. The equity ratio indicates how large a company's equity is in relation to its total assets. The debt ratio logically represents the proportion of a company's borrowed capital in relation to its total capital. The higher the equity ratio, the better, as it is less likely that a company will become insolvent. However, these values vary greatly depending on the industry. Over the last 5 years, Microsoft has significantly increased its equity ratio. Let's move on to the debt to equity ratio. The debt to equity ratio indicates the ratio between debt and equity, and this value should not exceed 200%, as otherwise the company could have payment difficulties. On the one hand, you can see that Microsoft has been able to reduce this significantly over the last few years, and on the other hand, you may also recognize the correlation with the rising equity ratio. Now we come to the last key figure of financial stability. The gearing ratio is another key figure relating to financial stability. Here, values below 50% are considered to be good to very good, and above 70% it becomes questionable. Microsoft has negative values here, which is excellent, as this means that Microsoft is virtually debt-free, as the net financial liabilities are completely covered by equity. And now let's move on to the liquidity ratios. The liquidity ratios indicate how well a company can meet its payment obligation on time. A cash ratio of 100% would mean that the company could immediately settle its current liabilities with cash. This may sound nice in theory, but in reality it is a disadvantage as the company cannot operate well. Their aim, therefore, is to achieve a value of around 50 to 20%. Microsoft has been perfectly within the range for the last 4 years, but we see a slight overcapacity in 2023, which is probably due to the planned takeover of Activision Blizzard. In addition to cash and securities, the quick ratio also includes current receivables. This value should be around 100 to 120% in order to ensure that current liabilities are covered. Microsoft has been slightly above the recommendation here in recent years, but this is not a bad thing. Now we finally come to the current ratio, which includes all current asset values and should be between 120 to 200%. As you can see, it is the same as the quick ratio, and this is also not a cause of concern. However, it must be emphasized that although these key figures are important for payment fulfillment, they should not be given too much importance as they change daily. Furthermore, a shortfall does not mean insolvency, as these current liabilities are most likely not all due on the same day. Now we come to the profitability ratios and further wonderful news, because Microsoft has had wonderful profitability ratios over the last 5 years, which you can see here. As I mentioned at the beginning, Microsoft currently has an average dividend yield historically, but this is related to the rising share price as the dividend yield changes daily. Let us now turn to the last key figures, the valuation ratios. Like the dividend yield, the valuation ratios reflect the current or previous day's valuation of a company and are therefore constantly changing. Here the share price is set into relation to the earnings, book value or sale per share. The book value represents the equity. In principle, the cheaper the valuation, the better, but if the valuation is too low, you should take a closer look at the company, as this can also be an indication of problems. As you can see, Microsoft is currently valued somewhat higher than usual. Last but not least, let us now turn to Microsoft's future goals and commitments. According to the Corporate Social Responsibility Report, Microsoft has set itself 4 key goals for the future, which are expand opportunities, gain trust, protect fundamental rights, and promote sustainability. Furthermore, Microsoft has committed to becoming carbon negative, water positive, and zero waste by 2030, while protecting ecosystems and building a planetary computer. And to achieve all of this, Microsoft has established a $1 billion climate innovation fund to support innovative technologies and business models that have the potential to have a significant and measurable impact on the climate by 2030. In addition, Microsoft is trying to make every person and every organization aware of the current climate situation and to encourage improvements. Sounds good to me. What do you think? That's it for today's Microsoft Insight. If you liked it, you are welcome to subscribe to the channel and activate the stock market bell to be informed as soon as possible about future company insights. And as already mentioned, this does not continue investment advice, but only serves to educate yourself, learn from your successes and failures.